Ever pondered why the tortoise beat the hare in that age-old fable? Could patience be the secret to winning the race of investing? Welcome to the world of investing, where patience isn't just a virtue, it's a strategy. It's about taking a step back, seeing the bigger picture, and resisting the urge to make impulsive decisions. Let's talk about long-term thinking. It's like planting a seed and waiting for it to grow into a tree, rather than expecting an instant forest. It's understanding that market cycles ebb and flow like the tides of the sea. It's about being steadfast during the storm of market volatility, keeping your umbrella steady even when the winds of change are blowing hard. And let's not forget, wealth building is a gradual process. It's a marathon, not a sprint. It's about accumulating wealth brick by brick, allowing compound interest to work its magic over time. Just like our slow and steady tortoise, those who exercise patience often come out on top in the long run. But don't just take our word for it. Let's delve into a real-life case study to illustrate the power of patience in investing. Meet Jane Smith, a savvy investor who's made a name for herself in the financial world. Jane started her investment journey 2 decades ago with a simple yet powerful principle at heart: patience. She understood early on that investing was not a sprint, but a marathon. Jane's investment strategy was straightforward. She focused on buying shares of companies with solid fundamentals and excellent growth prospects, then held onto these shares for the long term. She wasn't swayed by short-term market volatility or the latest investment fads. Instead, Jane remained steadfast in her belief that her chosen investments would yield substantial growth over time. During the economic downturn of 2008, while many investors panicked and sold their shares, Jane did the opposite. She saw this as an opportunity to buy more shares at discounted prices. Yes, her portfolio's value dropped significantly in the short term, but Jane was unfazed. She knew that market cycles were part of the investment journey, and that patience was key during these volatile times. Fast forward to today, and Jane's investment portfolio has grown exponentially. Her patience and long-term approach to investing have paid off handsomely, turning her initial investment into a substantial fortune. But it wasn't just about the financial gain. Jane's patience allowed her to take more calculated risks. She wasn't constantly reacting to market fluctuations, which meant she had time to thoroughly research her investments and make informed decisions. Jane's story is a perfect example of how patience can lead to success in investing. It reminds us that investing is a long-term game, where understanding market cycles, remaining steadfast during volatility, and recognizing that wealth building is a gradual process are all crucial components. This case study clearly showcases how patience can lead to more calculated risks and better financial outcomes. So the next time you're tempted to make a hasty investment decision, remember Jane's story and the power of patience. Now that we've seen the power of patience in action, what are the key takeaways from our discussion? First and foremost, we've learned that patience is indeed a virtue in investing. It's not about the quick wins or the get-rich-quick schemes. It's about the slow and steady race towards financial security and growth. It's about making thoughtful, informed decisions rather than impulsive ones, based on the latest trends or panic-driven sell-offs. Next, we've emphasized the significance of long-term thinking. Investments are like seeds. They need time to grow and flourish. An oak tree doesn't grow overnight, and neither does your investment portfolio. It's about understanding that the journey to wealth is a marathon, not a sprint. We've also touched on the importance of understanding market cycles. The markets are not always going to be in your favor. There will be highs and lows, peaks and troughs. But by understanding these cycles, you can better navigate the turbulent waters of investing. It's about remaining steadfast during volatility, not being swayed by the winds of change, but rather harnessing them to propel your investments forward. Moreover, we've reiterated that wealth building is a gradual process. Rome wasn't built in a day, and neither are fortunes. It's about consistent, calculated risks, and the patience to see them through. It's about recognizing that setbacks are part and parcel of the journey, and that it's through these challenges that we learn and grow. Finally, we've highlighted the fact that patience in investment decisions often leads to better financial outcomes. By resisting the urge to react impulsively to market changes, and instead waiting and assessing the situation, you increase your chances of making a more profitable decision. Remember, in the race of investing, it's not always about speed. Sometimes, like our friend the tortoise, it's about the patience to keep going, steadily and surely towards the finish line.